Good morning, guys. It's 11:15, so we're going to kick off and get stuck into another Q&A session all around JobKeeper Payments. So firstly, thank you to those all that have registered and joined us and sent through questions. We've received more questions than we have for the other webinars now, that I think that the information's starting to come through from the tax office and treasury in bits and pieces, and it's now real as such. So I appreciate you taking the time to share your questions. We'll acknowledge now though that we are going to try and work to the half an hour time slot and the like, so we may not get through everyone's questions today. We will do our best, and if we don't, please reach out to your advisor and we'll come back to you as soon as we can. And the same goes with questions as you put them into the pop-up screen there, just use the chat function there, put the questions up there. JP will be monitoring those, and again, we will do our best to answer those questions as we work through it. We've got a few crossovers and similar themes and bits and pieces, so we may answer a couple of questions at once as well. So again, thanks for joining us, and thanks for JP for jumping online again.
No, thanks, Paul.
This is the most attendees we've had, so you getting on board the last couple, I think they're obviously coming to hear from you and your wisdom. So I'm looking forward to your insight on some of the questions that you're going to deal with today. So
no, look forward to it.
Thank you. So I'm just going to make sure that I run through just some information here about disclaimers and bits and pieces. So our advice here is general in nature. If you do need further information, please contact your advisor to work through that. We will do the best to answer it based on the current legislation. So the ATO and the Treasury have released documents over sort of the Easter break and then Monday, and we've been reading through it. There's still some things that haven't yet been finalised though. So if you have taken the time to jump onto the ATO site, you will see that they are still saying more information to come in respect to that. We have interpreted it though, and we'll answer all the questions that we can, and if we can't, we will acknowledge that we don't yet have the answer for that. So going to kick straight into question time, JP, so we make the most of questions, and then we'll sum up at the end with some key dates and bits and pieces and what the next steps are. So John, Paul, you can deal with Les's question first. That'd be awesome.
Yep. Yeah, I'll kick off with first question we got from Les was, so we've got an employee receiving more than $1,500 from the employer due to them not working. So how does he deal with that, the money coming in from the ATO in the zero file? So the answer to that is we recommend that you create a new zero income account called JobKeeper Income from the ATO and code that as GST free. So that way you can keep track of all the JobKeeper payments that have come in, and at least then it's also a good little potentially a reminder for you, you know, whether or not the ATO may have missed one.
Very good. Just had one of our listeners or viewers just send me a text, so I was just acknowledging that. So thanks, Cam, for that acknowledgement. Les had another question around business participants and being self-employed, and specifically around I become self-employed partway through the financial year, would they still be eligible? So if someone has started a business so in the last 12 months, so they've now made a bit clearer in relation to tests around eligibility for the 30% drop in revenue. Won't go into the boring tax jargon of how they work at that 30% around GST supplies and bits and pieces, but for those that have started businesses during the period of time, they've actually got an alternative test now that uses the average income from when you started up until the month before you're assessing your eligibility. And then you work out what your average income by month. And if your following month in any of the next 6 months drops by 30% or more, you will be eligible for it. Again, though, even if that doesn't show eligibility, there is the option to go down the Commissioner's discretion path. So that's contacting the tax office and actually asking them to consider your current situation based on the facts. As we touched on last week, the more information you can have together leading up to this and having on file to support the decisions you make, and that's in conjunction with us. If you're working with us, we will have on file to show that why you assess that you were eligible. That's quite important because they've been clear that if you claim this and they then feel that you shouldn't have, even though we know that you should have, you need to have the proof to show why you decided to make that choice. So paperwork now is super important to have on file. So
how long will we need? Sorry, Paul. How long do we need to keep that supporting doc?
They've said they can go back 5 years to audit anything in relation to the JobKeeper program, and that goes for employees as well that say that they're eligible for it and potentially aren't. They can get caught up in this, and they can go back 5 years, and they can be forced personally to pay that money back. So as long as the employer's followed the rules and it's their employee that has broken the rules, the liability sits with the employee if they get caught.
Wow, okay.
It's an interesting one.
Bit like a rusty nail there, Paul. You get nicked by it, it could come back to bite you later on. So
that's for sure.
Next question came from Stuart, and this one's a really good question. We run a PTY limited business with 2 directors that are paid as employees. From what we're reading today, only 1 director will be eligible for JobKeeper. Can you please explain if this is true? And yeah, bit of a confusing one, this one, when they talk about 1 employee, 1 director per company. So our understanding of it is that if both directors have been paid as employees historically, they would be counted and treated as employees, and therefore both directors that work in the business will be able to access on the basis of them being employees. The 1 director per company rule is strictly limited to where you have a participating director in a company that's not an employee of the company. So hopefully, Stuart, we've cleared that one up for you.
Thanks, John Paul. Can I extend on that around what a participating, I suppose, business owner is? So I've had that question, not in this Q&A, but how do they actually assess if someone's actually working in the business? They've got to be actively working in the business, so genuinely out there working in a role. So they've got to have a clear definition of role in that business. So it can't be someone that is just from time to time maybe running around doing some drop-offs or a little bit of say paperwork and bits and pieces. It needs to be a genuine working person in that business. So just be mindful of that. Those with multiple structures though that are trading in both entities and have both people working in the business may be able to look at that as an opportunity where they can register for the JobKeeper program in both entities if they're both genuinely working in the business. So again, genuinely working the business is the key point there.
Yeah, great. I've had a question come in from Sheridan regarding apprentices. Just want to address Sheridan. We're going to come to apprentices later on in the Q&A. So just we'll park that one for a couple of minutes and we'll come back to that. So next question came in from Jack, and he said, guys, I think we should comfortably hit the 30% turnover fall for April, but it looks like we need to be paying employees the $1,500 a fortnight already, and we're not sure if we can back pay it or not. Can you please clarify this? We did our last pay run Friday, so hopefully we haven't stuffed it up. Got some good news for you. You haven't stuffed it up. The ATO has given us advice that for the first 2 fortnights, being those that end on the 12th of April and the 26th of April, that it's going to accept the minimum $1,500 as being paid in each fortnight if it's been paid late, so long as it's been paid by the end of April. So they're effectively granted us an extension of time to pay that first $1,500 for the purpose of meeting the JobKeeper payments. So can't stress enough, no need to worry if you haven't paid it yet. As long as you pay the back pay by the final day of April being the 30th, you'll be okay.
Thanks, JP. Next couple of questions are from Chris. So first of all, it's around turnover. So does it need to be quarter ending March 2020 versus quarter ending March 2019, or can it be just a month? So the tests are depending on what you decide to do, but it's now been very clear that you have the choice. So it is effectively you can pick a quarter or pick a month. So in the end, if you look at that, you just need to satisfy a drop in turnover of more than 30% in 1 month. And for those businesses that have been in operation for more than 12 months and the circumstances are the same as what it was 12 months ago, so not drought or expansion on bits and pieces, it's purely just 1 month on the previous 12 months ago's month for any month between March and September. So you may not have necessarily had a drop in March and April may not be, but if you envisage that you definitely see that in an upcoming month and have the supporting information to go with that, you will drop more than 30% in an upcoming month, we are saying that you should be registering for this program as long as you can justifiably prove that and work through that to justify that to the tax office if they come along and have a look. So until the legislation came out, Chris, it was based on your BAS lodgement period, so whether it was monthly or quarterly, but no, that you have the discretion to pick. But be aware that if your quarter's income doesn't drop by 30% and you've applied for the program because you've had a month that drops off and you do the quarterly BAS, you may get a request from the tax office to provide further information to support why you did register for the program. Next question was around directors and how directors' fees will be paid and are they eligible. So like we touched on before, directors are, so one working director is eligible for the JobKeeper payment if they're not getting it from another employment. So some people might be in a non-exec director role, but they've got permanent employment elsewhere. They aren't eligible. But if you are a director of your own company and you become eligible for the program, one director will be eligible, and that will be recorded. They haven't yet told us how that gets recorded in the books when that is paid out to that director. So we'll need to stay tuned on how that actually comes out as a payment, Chris, if they're not on the payroll as a paid director. And then the next question was around self-employed sole traders, traders whose businesses have been impacted or closed due to the restrictions and they're not registered for GST because they don't reach the $75,000 turnover. Are they able to access it? There's no income threshold. There is tests though around making sure that you do have a taxable income, so made a taxable supply in the period from July 2018 up until the 12th of March. You've got to be able to show that you actually were trading as a business and made a taxable supply. So whether you're registered for GST or not, you may be eligible for the program. So thanks for those questions, Chris, and we will let you know more about the directors one when we know more about it.
Yeah, great. Now the next question came from Chris, and then Wilbur's also sent in a question on this area as well. So I'm probably going to combine the two questions here. So we had the question is, online step 6 of enrolling for the JobKeeper payment states we need to use this business portal and authenticate with MyGov. If you don't have access to this, will Xero have something to lodge, or can it be done through the registered agent portal? And then Wilbur's then asked, I registered my interest in JobKeeper. How do I actually sign up or register, or when do we know how? So I'm probably going to address these both together. So thanks guys for those two questions. So in terms of applying for it, we can sign up from the 20th of April 2020. So that's when we're able to start signing up. It can be done one of two ways, either via the business portal, or we can do it using the tax agent portal on your behalf. So for you, Chris, who doesn't have business portal access, we can do that for you. And Wilbur, I know you use the business portal, so then you can do that via the business portal, or accordingly we can help you. In terms of Xero, what they're doing, we're still awaiting some confirmation from Xero in this regard. Understandably, given that the finalisation only came out within the last day or two, they won't have had time yet to develop a solution for this. I've got no doubt, however, that Xero will potentially put something together whereby they'll be able to assist you, from a practical point of view. Next question came in from Michael, which sort of ties in previously. He said, how do we apply where the business is a trust? So again, no detailed guidance yet, but all indications indicate that the application process should be the same, whether it's a trust, a company partnership, or whether we're paying on behalf of employees. So we're also, in terms of who's eligible, it'll either be one adult beneficiary per trust. So it'll be the same with a company. We've got one director that's eligible. For a trust, it's one beneficiary that's able to. So I hope that clears that one.
On the director, sorry, on the company one, it also could be a shareholder as well. So it's the director or shareholder, but only one.
But it's just one person.
Correct. Correct.
Right.
So we need to be mindful too about trusts that don't distribute to individuals as well. So they haven't given us guidance in that space there. You may have a trust that distributes to a company. You
Yep.
technically don't have an adult that is receiving a distribution from a trust. So we're getting further clarification on what that looks like, and do we actually need to distribute the JobKeeper money that would be about 10 grand in this financial year and 10 grand next year,
Yep.
through to the individual that we've nominated as the adult beneficiary. So we're still working through that one, JP.
Great.
Next couple of questions that come around from Estelle, and they're around employment and employees making some choices about whether they choose to work or on sick leave, annual leave, and those sorts of things. What I'm going to say, Estelle, is that I'm not going to answer your question specifically today, because it's based on a case-by-case scenario around what award you're in, what reasons they're on unpaid leave, or they're staying at home and bits and pieces, and also whether on sick leave, is it due to work cover and the like. What I will like to share though in this space is some discussions we've had with Abby Goff from HR Sorted, who we've spoken to regularly throughout the last month with everything in relation to COVID-19 and stand down provisions and all that. The Fair Work Act has actually brought in JobKeeper enabling directions that are really powerful for employers to consider how they structure their rostering and bits and pieces. Again, this is general advice, but there is ability to potentially use JobKeeper enabling stand down provisions to stand down a full-time employee to lower hours. And as long as they're working in the business for part of those hours, you can't change their hourly rate, but you may be able to change the hours that they work. But again, that's depends on award, EBAs and all those sorts of things. So just flagging that with you. And there's also been changes around annual leave. So in the past, annual leave had been the employee's choice really when that was able to be used. The JobKeeper enabling directions that have been announced as part of Fair Work actually allow you to direct an employee to use their annual leave down to 2 weeks. So if they've got 6 weeks of annual leave, you may be able to work on a strategy where over the next 6 months, they use 4 weeks of those 6 weeks, ensuring they keep 2 weeks still in the bank. Something else to be aware of is that even if you do stand down your employees, whether it's take their hours from 38 down to 20 or none, they still accrue their leave entitlements as well, unless there's something specific in their award that says not. So that was an interesting thing that we heard from Abby on that.
So sorry, Paul. So just confirming then. So if someone's on JobKeeper and they're getting their $750 a week, whereas they're normally a full-time salaried employee on, let's call it $1,500 a week, they would accrue annual leave at a normal rate at their normal pay of $1,500 a week.
Yes, they were still, yeah, so they only may be working 20 hours, but they will accrue, or 19 hours, they'll accrue the whole annual leave entitlements based on working their full-time week of 38.
That's really snuck through, hasn't it, under everyone's guard?
Yeah, it is. It's but so there's some powerful things for employees as well. But what we're suggesting is, if you do want to consider changing rosters, going to a 4-day week or a 9-day fortnight, even 3-day week, or cutting shifts, it's worth looking into it, because there can be significant savings in reducing leave balances and bits and pieces that may be able to be achieved. So just keep that in mind. So sorry I can't answer your question specifically, Estelle. We will come back to you offline and give you some solutions there, where we may even organise a meeting with, say, Abby, to work through what that looks like for you in your specific circumstance.
Great.
So JP, I know the next few questions are around apprentices, and we've also had a couple come through on the Q&A live. Are you comfortable to take those questions?
Yep. So I'll start on the apprentices. So question from Sheridan: will apprentices be eligible for JobKeeper? And then a question from Estelle, who said, with apprentices, I've made a claim to receive the 50% apprentice rebate for the January to March quarter already. Can I apply for JobSeeker for these apprentices too? So I'll touch on that. So first off, are apprentices eligible for JobKeeper? Yes, they are. So that's a yes there. However, you can either elect to get one or the other. So if you're getting JobKeeper for an apprentice, you don't then get the apprentice support. Our recommendation as a business has been to all our clients that we recommend, if you're able to apply for JobKeeper, apply for the JobKeeper, as the $1,500 a fortnight in every case should be more than what half the apprentice wage would be that you'd be rebated from the apprentice provider. So that's the first one. So they are eligible. Now, secondly, to answer your question, Estelle, who we've applied for the 50% rebate from January to March, that's okay. We're still able to keep that rebate for that period, but then effectively what we're saying is from January to March, we receive the apprentice rebate, and then we then flick into JobKeeper from that April period onwards. So bit confusing, but hope we've sort of clarified that one for you. So on an apprentice, you are eligible. Recommend you apply for JobKeeper if you're able to. So that's that one there. Now, we've had two questions come in. So first off, Paul, I'll probably check this one in with you. Bruce has asked, after you register with the ATO, how do you know that they approve you? And when or if do they tell you?
It's a very interesting question, Bruce. And from reading everything that we have, it pretty much says that if you nominate that you, like, so you go through the process, and I'll take you through the key dates in a minute. So you register, then enroll, enroll. That is all they're saying that you need to do, and then that you're automatically eligible, and they'll give you notification about it. What though it doesn't mean, though, is what we've read, is it doesn't mean that they can't come back and say at a later date that you shouldn't have applied for it. So that's what we've touched on earlier. It's a self-assess eligibility, but you've got to have the proof, just like you do when you lodge your BASs and tax returns. If they come and ask for documentation to understand why you've made those elections or those deductions or declared that income, that you've got the supporting paperwork. So, Bruce, we don't expect that you will know whether you've been approved or not. It'll be just automatic that they'll tell you that you're right. And then when you come to making your first claim, that's when you ensure that you've got the right eligible employees and for the right time frame on their monthly reporting that you need to provide to the tax office. But be aware, yes, they may do an audit or ask for paperwork to justify why you registered for it. So self-assess really, Bruce, and you're automatically in.
Yeah, good. The next question came from Will, and he said, look, guys, in setting up the payment in Xero or the payment to the employees where they're receiving, it's a JobKeeper rather than a wage as such, is there going to be a specific code we need to attach so the ATO will recognise it?
Would you like me to fill that one, JP?
Yeah, if possible, please.
Yeah, yes. So in respect to that Will, so if they're working and earning more than $750 and you're processing their pay through the payroll, there should be no changes because they're entitled to more than $750 per week. And that, I'm talking if you're on a weekly payroll. If you're on a fortnightly payroll, monthly payroll, you just apply the different parameters to it. If though that you are paying a top-up payment, so let's say someone earned $300 for the week and you're topping them up by the $450, we do need to ensure that a specific item is set up in your payroll system, so whether that be Xero or another, to record that correctly, one on their payslip to show that they've received that, and two in your payroll system to ensure that you don't attract superannuation on that. So it's not official, but it's been made fairly clear in all the announcements that superannuation will not be payable on any top-up payments. What we don't know, though, is whether work cover will be applicable for it or payroll tax, and there's been no discussion about that. They've been silent on both of those items. So to answer your question, Will, under $750, yes, you do need to set up a separate payroll item in your program. Over $750, no, it's just normal part of their pay. Like I touched on though before, if you're standing someone down and dropping their hours, you do need to consider how the leave provisions will calculate. So that's important that you don't get that incorrect when you're working through it.
Yeah, great. Well, they're coming in thick and fast now. We've had 4 come in the last minute, Paul. So let's try and address these as best we can.
Okay.
Okay. So I'll field this one from Jenny. So Jenny's asked, as a sole trader, I use subbies and no employees. Am I able to access JobKeeper for myself as my income has fallen by 30%? The short answer there is yes. Sole trader, if your income's fallen by 30% within a relevant period that we've explained earlier, you will be eligible for JobKeeper.
Yeah.
Great. Next one is Bruce again. Thanks for your participating here, Bruce. Can you clarify the $750 a week is gross, and do we have to tax it before paying employees? The answer to that question is yes. So the $750 a week does have to have the PAYG withholding taken out, and the employee will receive the net amount, which would be somewhere in that 680 range, 670, I think, Paul, somewhere around there.
Yeah, I haven't done the numbers, but I think it works out to be a bit over $1,300 a fortnight that they'll get in their pocket, unless they've got, say, a HECS debt or not claiming the tax-free threshold and all those sorts of things.
Great. Next one came in from Leanne, which is, what are the requirements for temps or casuals? Not quite sure what you're trying to ask there, but if it's on eligibility for a casual, they have to have been employed with the business for a minimum of 12 months to be eligible for JobKeeper, and in a regular and systematic way, isn't it, Paul?
Yes, correct. It needs to be that they've got some structure around their casual hours they're working. What we did find out, though, if you've, say, purchased a business from someone else, so you've been in business less than 12 months, but you've purchased a business and those employees come across, those casuals that come across with that business, as long as they're still with you and then all up between the previous business they worked for and you when you bought that business, they are eligible to be part of the program. So they're being, I think, fair where they can be, the tax office, in those circumstances.
Yeah, agreed. The next one coming from Katie, which is, how long are JobKeeper payments open for? E.g., if I don't think my business is eligible now, but what if in the future we see an unforeseen downturn in, say, May 2020? What do we do there? So the answer to that question is, if we don't believe we're eligible now, but we do become eligible in, say, May, we're eligible to receive JobKeeper from May onwards. So any application after the end of April is prospective, not retrospective in nature.
Mm-hmm.
So hope that clears that one up. Dan has said, guys, can annual leave accrued before the start date of JobKeeper package be paid using JobKeeper payments?
Yeah, my understanding, Dan, is that is correct, unless there's specific things in someone's award or EBA that doesn't allow that. Again, touching on that, they've got to have a minimum of 2 weeks of annual leave in the bank. You cannot force them to go lower than that unless you have a written agreement with your employee in relation to that. So yes, you can use prior annual leave.
So from a practical point of view, Paul, if someone is sitting at 4 weeks annual leave now, we can pay them annual leave down so that they've got 2 weeks left, and then from there it flicks into JobKeeper top up effectively.
Yeah, that's my understanding of what we've been shared from the HR people that we work with and the reading that I've done. But I think it's worth getting specific advice on your situation, because as we've touched on before, HR is a minefield of an area, and we know down the Fair Work Path normally sides with the employees in most instances. So again, specific to your circumstance, and everything agreed to in writing, so that if anything comes back at you from an employee that agrees to something and then says they've changed their mind, make sure you've got it in writing.
Great. Okay, the next one is Michael Cowan. Sorry, Michael. You've said, if we have a director of a business not receiving a wage, can the director still receive JobKeeper, assuming the business is reduced by 30%? So the answer to that question is, the director can receive JobKeeper. However, it's limited to 1 director per company, and 2, as you've touched on before, you have to be sort of active in the business, rather than passive in the business.
Yeah, thanks, JP. And I'm just conscious of time.
Paul, that's all the questions we fielded.
Fabulous. And what's even more pleasing is that the number of attendees that signed on at the start are all still on there, or they've either had one or two drop off and somewhere in there. So we're finished with the same number at the end, which is always pleasing to see. So thank you guys for hanging around. I do want to share a couple of other things though to sum up where we're at. So I'm just going to share my screen and chat about a couple of things that you should be aware of that we want to highlight. So number one, you should be able to see now on my screen some key dates that are important to follow. So number one, we want to make sure that you are registering your interest now. So jump on the tax office website if you haven't already and make sure you register your interest now. From the 20th of April, you can enrol in it. So that's effectively going into the JobKeeper program, and that's when you've got to say why you're eligible, what employees, all those sorts of things. There's a bit to it. There's about 7 or 8 steps to do that. What we've read though is that you must be in the system by the 26th of April. So sort of the cut-off date before the first 2 fortnights finish to be eligible to get the first 2 fortnights. So you've really got a week window if you believe that you are eligible to get that enrolment done.
So effectively, if you've done nothing now, don't panic. You've got until the 26th of April.
Yeah, so we've still got 10 days, correct. So you've got 10 days to work through it yourself or seek out some advice to work out your eligibility to enrol. Then from the 4th of May is when you can actually apply. So that's where they're saying you apply for the first 2 fortnights to be reimbursed to you by the tax office. So from the 4th of May, there is a process where you need to submit the form with the tax office through MyGov, etc., to say, well, these are the 5 employees that I have that are eligible. They all work for both fortnights. Please reimburse me those funds. Again, in the enrolment process, you have to make sure that you've got declarations from all employees that you're claiming for on file and keep those for 5 years. Payments will start to be received after the 4th of May and then monthly right through to October. So 5 of the months, there'll be 2 fortnights, and then in the month of September, there'll be 3 fortnights that you're claiming for. On a reporting basis, not just on the 4th of May from an application perspective, every single month you need to report to the tax office numerous things, including the number of eligible employees, any employees that have left, or change of circumstances, as well as your turnover and a couple of other items that they're suggesting that may need to be reported. Again, we haven't seen what that looks like, but the detail shows that there will be monthly reporting, similar to like you do with a BAS and bits and pieces to report this information. So what happens next? So next steps. So option 1 is for you guys to sort of do it yourself. So register if you haven't already, assess your eligibility, enrol, and then go through applying for it each month yourself. Another option that we're working on here is to make ourselves available to go through that process with you. So we'll be sending something out later today, if not tomorrow morning, with some options around what that looks like for you and how we can assist you in this process. Because as you can see from what we've talked about, there's a fair bit in it. So we are happy to make ourselves available to work through that, and we're working on some costings in respect to what investment you would need to make to engage us to do that. Option 3 is that you may go through the process and you're not eligible yet. Like we touched on before, don't just go, oh, let's forget about it. You can elect to go in at a later date. What you can't do is go back and claim for months prior. So if you decide that in June you're eligible, you can get it for the next 4 months. You just miss out on the months of March and April. So it's important that we know that this is around for 6 months. So don't necessarily put the queue in the rack if you think you're not eligible now. Keep your eyes out for it as such. So again, thank you. Thank you to John Paul again for volunteering to do this. I think he's actually loving doing it, and I think you're doing an awesome job, JP. Thank you to the team behind the scenes as well that have put this together and given us the opportunity to share this with you guys. And most importantly, thank you to our clients for sharing your questions. It makes it enjoyable to work through what we are when we hear some really good questions like we've had shared with us today, to go through them. So please keep shooting them with us. And we'll
if I can just reinforce that as well. You know, we want to hear every question that you've got. We want to help you through this. We're all here in it together to get through.
Yeah. And Also, I just want to touch on, make sure that you are reaching out if you do need support, or if you know people that do need support. It is a very difficult time that we're going through, and we all deal with it in different ways. So if you do need support, make sure you reach out to someone like Beyond Blue or another organisation in that space, or refer other people to that if you know that. Make sure you're supporting local business as well, and look after yourself, guys, and stay safe. And thanks for joining us today.